Hello, my name is Steve Bigelow with the Candlestick Forum. We're in July, heading for the July 4th weekend. The markets had a good positive surprise this morning. The huge unemployment or the huge employment numbers added a boost to the market. The investor or consumer sentiment was positive, and it showed that they were still trading the Dow above the T-line. Same scenario on the NASDAQ. Nice steady uptrend. It opened positive, even though it traded toward the lower end of the trading range. You can see the overall investor sentiment is still bullish in an upward direction. This allows us to maintain lots of profitable trades. Our recommendations on some of these trades have produced steady eddies where we can see one basic factor. They haven't been able to close below the T-line. Just a very simple strategy. All you have to do is within 2 or 3 seconds each day, see that it's still trading above the T-line, or knowing that if it closes below the T-line, you're going to close out the position. Overstock, also nice steady eddy using the T-line as support. And our recommendation on APPS was based upon a fry pan bottom breakout, a pullback, a J-hook pattern, and how long do we hold this position? As long as it stays above the T-line. So when we can see pattern setups, like in our recommendation on NVTA, we may have missed this move, but we know that this move right here is a J-hook pattern, is likely to produce the same price move as this right here. So it already gives us a measuring device to see whether buying up here at these levels coming out of a J-hook pattern is worthwhile. Essentially, this type of analysis, knowing that investor sentiment works the same way time after time, and that's what creates these patterns, allow us to take advantage of the big price moves versus just buying a stock that might go up some during an upward market. We can pick out the patterns, like in our recommendation on MDLA, the scoop pattern. See the flat handle, then the scoop, which was created by a Morningstar signal, right off the 50-day moving average, closed back up above the T-line, makes this a very simple trade. If it opens positive on Monday, what's it telling us? The doji rule. It's going to move in the direction of how they open after a doji. 2, if they open up positive, giving us the potential of a doji sandwich, that means the magnitude of this candle and the magnitude of that candle are going to be the same. And what's that tell us? They've broken out. We're going to have a strong price move. Everything that we look at in candlestick analysis is merely based upon the fact that these patterns have been recognized for hundreds of years by Japanese race traders, and it makes it very simple to know what to do based upon strong entry strategies because of the signals and where the pattern might move on a pattern breakout. As long as we stay above the T-line, and if the Dow can get up through the 200-day moving average, probably getting back up here to fill this gap, that means we likely have a wave 1, wave 2, right back to the 50-day moving average. If it gets through the 200, we're now in wave 3, which implies a lot more upside. So with that, drink a lot of beer, lots of hot dogs, have a good, safe 4th of July weekend. We'll see you in the chat rooms.